Hey guys, I've been getting lots of questions lately about what are you guys doing in Oklahoma City? People are just wondering what is our business setup and what are some good things happening down there. So I created this quick video to give you a quick walkthrough of some of the things that we're doing in Oklahoma City, and what are some of the cool things that other investors are doing to create cash flow in real estate without all the traditional headaches. So one of the things we're going to talk about is how the real estate investors and passive private lenders are really cashing in today's market. So one of the things that we'll walk you today, so who we are, why investors are excited to work with us, why you want to be part of this market, because there's a lot of good things going on in this market right now that you want to be taking advantage of, and also how others are profiting. So we'll look at different strategies other investors are using, and we'll actually walk you through a case study of a recent transaction that we did, who was involved and how we were able to get the deal and how everybody was able to profit. So some of the things you'll learn from this presentation is how to analyze a good real estate transaction and what are some numbers you're looking at, how do we make sure that the deal is something that you want to invest in. I also want to talk about how to reduce your risk and protect your hard-earned money. The most important thing about investors is make sure that you don't lose money as we move forward. I will also talk about how to partner with other experienced investors so you don't have to deal with the traditional headaches that comes with running real estate, like tenants and toilets, and all the hard work that goes along with it. So a little bit about us. We're a leading real estate property wholesaler in Oklahoma City. So that means my team and I provide our investor clients access to really hard to find and deeply discounted deals, which are just not generally available. We use a lot of innovative marketing systems, and we'll talk a little bit more about that later on in the presentation. And we also have local relationship with other real estate professionals in our market to really get the deals that nobody else is getting. So we specialize in buying distressed property. So that includes multifamily, commercial, retail, single family, bank REOs, and sellers who just need to sell fast. So we basically work with property sellers that can't sell through a traditional route. So it could be either the house needs a lot of repairs, or maybe it's the wrong side of town, or there's something else going on with the property. So we're able to work with these sellers to get some discounts, and we pass these discounts on to our investor partners. And then our investor partners are either going to rehab the portfolio or what a lot of people are doing these days is just putting in for cash flow. So they're putting renters in there and getting the money, make money off the rental income. And we'll share what that looks like in our upcoming case study. So you may be wondering, why are investors working with us? I mean, why can't one just work with traditional agents? Well, in today's market, good deals are really hard to find. Uh, Inventories are drying up in the MLS. Banks are no longer dumping properties in volume in the marketplace like they used to. And sellers are, I mean, they're looking for top dollar for their properties. So it's getting harder to really negotiate with them on getting the good deals. So what we provide our investor clients is we help them locate, because it's really hard to find in these kind of deals that they just, can't find or don't have the time to really invest to find on their own. Now, how are we able to buy properties at 50%, sometimes even more on their market value? We target off-market houses. So usually not stuff you're going to find in the MLS. We have marketing strategies that we use, such as direct mail. Now we're going to hit the tired landlord, people who've been landlording for quite a while who just don't want to do it anymore. People with vacant houses, some of them for years, that have done nothing with it. And then we come along and provide them a solution. Landlords who are evicting tenants, that gets tiring after a while. If anybody's done that for a while, that gets a little tiring, always trying to evict bad tenants. And so we'll hit them with our message and work with them to really get them out of the situation. We also make use of online advertising. So Google, Craigslist is a hotbed for us, and other sources that we use internally. We also work with probate sellers, so people who have properties that they don't know what to do with, where they inherited and you just sick of it. So we work with them to get get the deal at a discount, and then we pass it on to our investor buyers. So why Oklahoma City? Well, one of the things that we did our research and learned about Oklahoma City. It's a it's a market that's growing rapidly. So they're projecting 1.75% annual growth. So people are actually moving there, and because of that, they have relatively low unemployment. So the job market there is really in the uptick. They're one of the lowest employment in the United States. The city is dumping a lot of money in economic development. A recent project, they dumped 777 million construction project to improve different areas of Oklahoma City. So they're really excited and really investing in a lot of areas to really drive a lot of growth into Oklahoma City. And the last one is probably the most important, which is they have price points that are easy to cash flow. Um, and cash flow is very important. I see a lot of investors these days, they're buying property with negative cash flow. But really, positive cash flow, one of the great things about it is liquid. It's money that comes in your pocket every month. It's predictable, so you know what's going to come in, and it enables the investors to better withstand the ups and downs of the market. I mean, now for the most part, it's a hot market, but it's not always going to be that way. If you remember the last crash, a lot of investors were underwater in the properties, and that's the reason they ended up losing the properties. With positive cash flow, you can hang on to the property as long as you can get a tenant in there and it keeps cash flowing. So what that does is allows you to put you in control on your investment. And while you're still able to participate in the appreciation that may come. So you can wait out the bad times and take advantage of the good times. So how are investors building cash flow in today's market? Where there's still the traditional route, which is buying rental income property. The good of that is you get lots of tax benefits out of depreciation and other creative strategies to reduce your tax burdens at the end of the year. You still get appreciation. So, most of the good cash flowing properties appreciate every year, and you're able to take advantage of that upon rental property. And you have full control over the transaction. You can get in and out whenever you want to. And that's something that's very exciting. But there's also some bad sides with rental properties. Anybody who's owned rental properties knows it's very time consuming. You have to deal with tenants and toilets and having people call you all sorts of night if you're managing yourself. And it's really hard to do remote. One of the things that you're going to find in your local area may be hard to cash flow. So if you're trying to do it in other areas, it's really hard to do. Um, if you're going to do with rental properties, because you want somebody over there that you can trust that can stop by the property and take a look at it and make sure everything's going okay. Unexpected expenses come up, toilets break, pipes burst in the middle of the night. Those are all things that you're going to have the right amount of capital there to take advantage of if something goes wrong. And even if you have a property manager, working with you on a property, sometimes managing the managers is just as hard as you managing the properties yourself, because a lot of times the property managers have different interests than you do. Uh, if your property is doing well and you're not getting any calls and the tenants are happy, the property managers are not really getting paid because a lot of them make fees off the turnover and different services provide to you. And so they have incentive to make sure that they can make money. So they might let some deferred maintenance go a little bit longer than needed. So that's something that can be very troublesome, especially if you're working a full-time job, you have you're working professional, you don't have time to deal with all those different aspects of the rental property. The other opportunity to build cash flow is hard money lending. Now, the good thing about hard money lending is that you're able to get high interest rates. And so you can get north of 8% on a property and do really well. And get somebody else to do most of the work. So you partner with an investor who's, very experienced, and you have full control about who that partner is. So you can vet them out. Usually they want to be able to qualify with you before jumping into the deal. And so you have more control over the transaction without actually doing a lot of day-to-day work. The bad side of being a hard money lender is that you're mostly dealing with people with rehabs and fixing flippers. And so what that means is that you're susceptible to the market's ups and downs. So if the flipper got in a bad deal, they can be wiped out of the transaction fairly quickly. Once you fund it, you have very little control over it. So if you have to do all your vetting up front to make sure you have a good operator or someone who's an experienced investor. Because once they go in, you have no control over what kind of expenses that they're putting into the property. You can definitely consult with them, but ultimately they get to make a decision. And the other bad thing is that you're constantly looking for deals because you're in and out of deals so quickly that you're constantly looking for the next person to loan more money to. And so it becomes it is a passive way of getting money, but there is actively involved in making sure you're getting new deals all the time. The the other option is long-term private lending. Long-term private lending is uh, there's a lot of positives and upsides to that. You're mostly working with buy and hold investors, so that means they have ongoing cash flow that can be coming in a property every month, and so it's a much more stable transaction, longer term, so that every month you're not trying to find a new investor to work with. Because they're landlords and they're in this for the long run. So you have ongoing cash flow, and of course you have the real estate as an asset. So if something goes wrong, you get a good cash flowing property that you can just take advantage of, and maybe you get another investor in there, or for a short while you're going to be landlord yourself. But it's definitely secured by an asset that doesn't lose value. It's passive, um, which means that the investor will do all the work, and then you get a consistent interest rate that's going to come to you every month, so you know what to expect. And you get better returns than other investments out there, like CDs or even the stock market sometimes, with ups and downs. You are limited on the upside on this transaction because the if the market automatically shoots up and there's a lot of profit made on a property, you're not making money on the equity. You're just getting um, your standard interest rate every month. But that's the good thing. That means you don't have to worry about if the market goes down too, that you're going to be impacted by that. There are other opportunities. I'm not going to go through this video because they're a little bit more complicated moving parts to them, but I just wanted you to have visibility to them. This transactional funding as a private lender. Those are more short-term, 1 or 3 day bridge loans, and you get 1 and 2% interest on just a quick turn transactions. That means you're making money back in about 3 days, and you made 2% interest on that money. You can do the math to how much return on investment per year if you can basically do transactional funding every day. Joint venture funding is also something that you can take advantage of. The advantage of joint venture funding is that you can participate in the upside and the cash flow of the property. So if the property appreciates by a lot of value, you also partake in that, which is a little bit advantage over the traditional private lending, which when you just get the interest rates. So let's jump in the case study real quick, and just so you can see how this works in real life. So real estate is really about the fixed up value. Most investors call this the ARV, also called the after repaired value. Unlike a stock market, when investors buy at the market price, real estate is a value investor's opportunity because you can buy and create cash flow with significant discounts. So you can buy an asset that's very under market value and improve it and make a money off of that. The next money is the repair cost. And so that's the amount it's going to take to fix up the property and bring it to the after repaired value. So then if you put it all together, the ARV minus the repair cost is the AIV, which is the as is value. So this is usually what you'll see listed on a listing. So this is the what the property is worth right now, with what needs to be done to it. So, just so we're clear, before we move forward, the ARV after repaired value minus the repair cost equals the as is value. And then we'll walk you through an example so you can really cement what that means. So this is a case study of a recent deal we recently did in Oklahoma City. This is Northwest 29th Street. The after repaired value on this was $50,000. The repair cost was $15,000, which puts the as is value as $35,000. Now we were able to sell it to our investor client for $18,000. So that's 66% of the after repair value if you include the repair cost in there. So that's a pretty good deal. Now, from a private lending perspective, not only are you getting a property that has about $15,000 in equity, you're getting a property that cash flows at $775 per month for rent. If you subtract out operating expenses, that's taxes, any kind of expenses that need to go in a building, and your monthly payment, which is 324.70, that's a 10% interest rate amortized over 30 years. You're getting almost $4,000 in annual cash flow from this property. Now, in about 6 to 12 months after the owner kind of fix up the property, he's gonna get a regular financing from a bank and then cash you out of the transaction. But you're making money every month based on that. So your money comes back to you within about a year or so, and you've made a substantial amount on your return on your money. So what happened there is we get the offer accepted from the seller to buy Northwest 29th at $18,000. We estimate the repairs at $15,000, and we estimate other costs at around $4,000. That's going to be closing costs and other things associated with getting the property closed. The investor borrows $37 from a private lender. Now, the private lender just sends the money to the closing agent, so it doesn't actually go to the investor, so which makes it a really clean transaction. The closing agent records a lien on behalf of the private lender at closing. So the private lender's money is secured by the real estate. $37,000 loan buy a house that's valued at $50,000. And for that, the private lender is getting paid 8 to 10% interest every month for using that money. So really, the relationship between the real estate investor and a private lender is what creates success. As a private lender, you want to make sure you're partnering with knowledgeable, experienced investors. And other investors call to buy from us. What that means is that we know investors that are looking for relationships with private lenders nearly every day. And if that sounds like a relationship you'd like to know more about, or you're just looking to learn more about how private lenders make private loans and secure the money with real estate, just go to our website, www.passiveinvestingreport.com, or you just give us a call at 1-877-407-5633. And thanks for listening to this presentation, and we hope to hear from you soon. Thanks.